Hello again. So happy to have you back. And so today I want to talk about establishing the business structure of your business. So here in the United States, there are 5 common business structures that you will select from when establishing your business and subsequently registering with the state in which you live. And so those 5 are sole proprietorship, then there is partnership, a corporation, an S corporation, and a limited liability company, also known as LLC. And so I go more in depth about all of these structures in my program. But just to give you a little bit of a snippet while I'm here with you today. And so for sole proprietorship, that is when it is someone who owns the company by themselves. And now understand that you can't be both a sole proprietorship and a limited liability company if you want to treat your company like a corporation. So the Internal Revenue Service does distinguish between the two. And you can be a single owner LLC, but I just want you to know the difference between a sole proprietorship and the LLC. And so for a partnership, that is when 2 or more people, they do business together. And so whether you're doing it with a friend or a family member, or you have someone else that you're collaborating with, each person is going to be contributing money or maybe property, a skill set, or maybe the physical labor in developing your product. So let's say you are a designer and you have someone who's helping you to build your product or develop your product. And so you might offer all the intellectual design concepts, and then they're actually putting the product together. So you might be working together to have this partnership. And so then you would share in the profits and the losses of the business. And so this would be another situation where, again, you would need to be working together and get legal counsel in terms of the profits and the losses, how that will be split up. Is it 50-50, or is it 60-40 or 70-30? Those are the kind of things that needs to be discussed when you go into a partnership. So the next one is a corporation. So it's when you are conducting business and you realize your net income or loss, and you're paying your taxes, and then you're going to distribute your profits to your shareholders. And so this profit is taxed to the corporation when it is earned, and then it's also taxed to the shareholders when you distribute dividends, which is creating a double tax. So yay, USA. And so let's speak briefly about an S corporation. So this is when, for like tax purposes, you want to pass all your corporate income, your losses, and your deductions and credits through to the shareholders. And so you are limited to a maximum of 100 shareholders and only one class of stock. And you have to be a domestic corporation in order to file as an S corporation. And then back to the limited liability company, the LLC. And so it's a business structure that is recognized by all the states. And so you would need to go to your state department to determine the requirements for an LLC within your particular state, because each state will have their own nuances. And so you can have as many members as you want. And as I mentioned before, you can be the sole owner of an LLC. And so depending on the number of members that you have as part of your LLC, the IRS may classify you as a corporation, which may have tax implications associated with that. So it is very important that you understand the different structures. You need to go and read up, investigate them all, so that you can determine the best structure which you would like to register your business under. And then also ensure that you read up on all the tax implications of each filing status. So thank you for being here with me again today, and I look forward to sharing more with you. Take care. Bye.